Just when you think cattle prices can't get any higher, they continue to crush records with new record highs again this week. Michelle Rook looks at what's driving prices and why consumers don't seem to be losing their appetite for beef.
Tied this week, both live and feeder cattle futures hit not just contract highs, but all-time highs again. It came on the heels of a third straight week of record cash cattle trade for fed cattle out in the country. Now, we've talked about the historic low in the cattle cycle, but the market is also being fueled by fund buying and strong demand. The cattle market continues to shatter records. Last week's 5-area weighted average fed cash price hit a new high for a second week at $220.71. Individual sales in the north topped that level.
$223 was paid by probably 5 or 6 different packers that I know of. I know customers here got it from 3 or 4 different ones. There was a little tiny bit of 224 to a regional, but 223 widespread.
Amazing. For someone that's been in this business my entire adult life, 45 years, I'm just kind of dumbfounded.
And this week's fed cash cattle prices were even higher, with the south ranging from $218 to $221 in the north, from $225 to $228 live, mostly $355 on a dressed basis. While offset by higher weights, the driving force is historically low inventory after 7+ years of herd liquidation.
Everybody knows we got tight supply, right? The smallest cow herd since '51 and the smallest calf crop in a long time. So yeah, here we are.
Year-to-date slaughter is down 6%, giving producers leverage, despite packers also cutting kills to regain margin.
If you look at April overall, cattle kill was down about 8% from last year. What should be offered cattle supplies only down 1% for versus last year.
The other supportive feature is demand. Choice beef values topped $346 this week, the highest level in 2 years, as retailers gear up for grilling.
The consumer has, while they may be cutting back in some other areas, is still supporting the box beef price pretty well.
And one of the things that's been really carrying that beef market has been the grind, the hamburger and the good stuff, the 90 and the 93s. Let's keep an eye on that very carefully. It seems like the demand for that has held very, very strong.
I think what this speaks to what this business has done over the last 20, 30 years in the quality of our beef and the way we've marketed it.
Closeouts on fed cattle are ranging from $300 to over $500 per head, and the fed futures and cash tops may not be in.
As long as we can stay current, and maintain leverage, I think the market continues to stay in pretty good shape.
Live and feeder cattle futures were resilient during the recent correction in the S&P, offering hope the funds will defend their long position.
Short term, we can have a $5 or $10 break in cattle at any time just because of profit taking. To put the cattle cycle peak in place, you about have to see increased heifer retention and actually increased calf numbers, and there's a big chronological gap between those two.
And fund buying combined with continued strong fundamentals look to give the market lasting power beyond the last bull run that ended in 2015.
That same type of story is going to be in play for us all the way into this 2026 timeframe. So until the market itself tells us a different story, we have to agree that the bull run is still in play.
Feeder cattle futures also made new highs this week, with August and September moving above $300 on Thursday, pushed by cash, with the index at around $294. And these are levels that need to be protected by producers.
You keep floors in and protect yourself and hedges, just because this market's going to get more and more volatile as it gets more stretched in terms of historical prices.
I'm Michelle Rook for U.S. Farm Report.
Thanks, Michelle. Well, to take a deeper dive into these markets, because they are so incredible, Don Close is a senior animal protein analyst who's been in the business just a few years. Kidding, it's been decades. Don, what word would you use to describe the cattle market right now? Incredible or scary?
Both A and B. I think the prices we're looking at are, absolutely new records, but phenomenal, exceeding the price forecasts that we've had out there that are bullish enough as they are. The same time, I think at these price levels, particularly the rally we've had over the last 4 weeks, the market's overextended, and we're certainly becoming vulnerable to some kind of a correction.
Yeah, so what's interesting to note, Don, is the number of cattle grading select has actually declined. And in the past few weeks, more cattle have graded prime versus select. What does that tell us?
It tells us that the industry listens to consumers, and we're clearly delivering the quality of product and providing a quality eating experience every time. I think so much of, if you look at total production, the rally so far is not so much driven by tightening of supply. Well, that's still to come, but the demand structure under this market is where the demand base that has enabled the prices we're seeing today.
So when you look at the market overall, what are some longer term implications with cattle prices this high? What could change that longer term?
I think the second quarter is going to be a real bellwether quarter. When we, in the April cattle on feed report, we saw the decline in the percentage of heifers on the on feed mix. Now it's at like 37.65, 37 something. It's still mathematically in a liquidating period of the cycle, but it is slowing down. If you then look at the quantity of rain we've had across the cow-calf region over the last month and a half, you also look at the decline that we're starting to see in the percentage of heifers in the auction weekly sale barn mix. Combined, it shows that producers are finally, that carrot has finally gotten so big, and that producers are starting to look at retaining heifers. So when we get the July cattle inventory report, it gives us the next picture of the percentage of heifers on feed. Whether we're still contracting or expanding will be a real solid indicator of this market going forward, and especially for prices for the second half of 25.
You mentioned it in the beginning. You said with prices this high, it's scary. And that's what we talked about at CattleCon earlier this year. And then we keep going higher. So what are some scars potentially that we could see? I mean, what are some impacts on this industry that we're really just not talking about enough right now because cattle prices are so high?
We know that from history that the cattle market particularly trades with very sharp tops and bottoms. Whenever we see a high in this market, wherever it comes, our goal would be to try to plateau and trade sideways. But the history of this market tells us that won't be the case. If you look at the first cost of replacement females, the first cost of stocker and feeder cattle, the guys have so much money in these cattle that if there's not sufficient risk management structure in place, they're just the amount of exposure we would have on a correction will be too great for anybody to endure.
Really good point. Don, thank you for joining us this weekend and providing more context. We appreciate it. All right, we need to take a quick break, and then are more trade deals on the horizon? Ag Around the World is next.